What is up, guys? Dirk here. In today's video, I want to explain the events that happened yesterday where Binance CEO CZ stepped in and said they're going to create a fund to stop the industry from collapsing, and Elon Musk jumped in, and basically what happened is they ended up saving crypto up to this point. I'm going to break it down for you, and I want to also share with you still some technical insights into how these price actions move in the market and why this is not as random as a lot of people think it is. There's a lot of reasoning behind why prices move in the way they do. So today is going to be informative, educational, that can, really help you be more profitable and understand these markets. So let's dive right in. By the way, if you enjoyed this video, please smash the like button, subscribe to the channel if you haven't done so yet. It's completely free. Click the notification bell. And if you want to get on my email list so I can notify you every time I send an email or there's an important update, first link in the description down below. Click that, enter your name and email, and that way you're on my email list. It is also 100% free. Okay, so as you can see, Bitcoin is trading at 16,800, and a year ago we were at almost the all-time high, roughly just over a year ago at 69,000. Now we're at 16,800. We have come down a long way, but yesterday was an interesting turn of events because there's been a lot of chaos since earlier this month with the drama that CZ basically started by pointing out that FTX was insolvent. Now, of course, it's FTX's own fault, and Sam and Alameda, all the bad things that they did created the possibility for that to be pointed out. So we can't go and blame CZ for making that problem in FTX. That's completely up to those guys. But CZ did bring it to light at a very interesting time when technically the market was about to turn bullish. He brought it to light, crashed the market, okay? And now that the market is almost crashing and imploding, yesterday he said, to reduce further cascading negative effects of FTX, Binance is forming an industry recovery fund to help projects who are otherwise strong but in a liquidity crisis. More details coming soon. In the meantime, please contact Binance Labs if you think you qualify. So in my opinion, what he's saying here is basically, we are aware that the industry is very fragile and there's not much needed to completely collapse everything because the trust is gone. We don't know what's happening with other exchanges and we need to put a stop to that. So let's step in. Basically, what happened in the traditional finance world in the 2008 crash, when things were getting too bad, the big boys had to step in and they had to bail everyone out. And, that's happening to a smaller degree now in these markets. And it's not just CZ. I suspect there's going to be other big players that are going to come in too. We've even seen Elon Musk tweet yesterday too, BTC. So Bitcoin is going to make it, but it might be a long winter. So what we're seeing here, I think, is a coordinated effort to stop the crypto market from imploding further. That doesn't mean the complete bottom is in, but this makes a big difference because that also restores a lot of confidence in the market where there was once a lot of uncertainty. Sure, everything is still really bad with FTX. There's a lot of people who lost a lot of money. But now, with big players stepping in and saying, hey, they're going to, potentially save the industry and bail everything out and stop it from actually collapsing, that reduces the fear of thinking, hey, everything is going to zero, more exchanges are going to collapse, etc., etc. And now this might actually put in a local bottom for now. Don't want to call that just yet. We still have to see. We're nowhere near any sort of bullish reclaim, but this is interesting. So going back to the charts, I want to show you something really cool. Here is if I overlay these tweets on the timestamp when they were tweeted, right? TradingView is really cool. You can just copy paste the tweet URL and it actually puts the tweet on the chart at the exact time when it was officially tweeted. And you can see over here, as the market was starting to drop here and there was danger of a complete collapse, potentially towards $14,000 or $10,000 on the way down, look at what happened. CZ tweeted this tweet that I just read out to you. Elon Musk tweeted at basically the same time, right? So between the two of them, that's over 100 million followers that are seeing this. Obviously, a lot of people are watching their every word. And we got this massive pump to the upside. Well, pump. It's a big green candle on the shorter time frames. Okay, if you look at a 5-minute chart, it is big. If you look on the daily chart, obviously it's not that big. But now we kind of potentially have a bottom here, a little bit of a higher low here, and we have to wait and see how this is going to play out. Like I said, I don't think we are in any sort of bullish territory just yet. I said that in the weekly video that I uploaded yesterday. If you haven't watched that, go and watch that. Basically, we need to reclaim the breakdown level of about $19,000. Anything, any rally up to 19,000 could just be a bit of a relief rally, a squeeze, a fake rally to potentially still go lower. So we're not out of the woods just yet. In my opinion, we can only start considering that once we get back above 19,000. But for now, this looks interesting, and it may be the case that we have actually put in a floor over here where, you know, like I said, the big boys are stepping in and saying, hey, this is where we draw a line in the sand, and this is where we're going to defend, and maybe we don't let it drop further than that. So this is interesting to see. We have to see how the markets continue to play out for the next few days and how this week ends up closing at the end of the week, because I think that's going to be very, very telling. So now I want to give you a bit of a technical explanation of what happened yesterday and why yesterday's move was actually very predictable to a certain degree, and it has to do with leverage. Okay, there's always a lot of leverage trading, a lot of leverage in these crypto markets, and not just by institutions or anything like that. There's a lot of retail traders who are trading with leverage, futures trading, and they're trading with high leverage. We're talking about 50x, 70x, 100x, even 25x is really high. And they're taking all these bets in certain directions, hoping to be able to obviously get that direction right with leverage to be able to make big profits. Now, as you probably know, retail traders, most of them lose. I don't know what the real official stats are, but it's estimated to be somewhere around 90%. So 9 out of 10 retail traders, when they end up day trading and they trade with leverage, end up losing. And that is the point of these markets, because they move in such a way to keep tricking the average retail investor to keep taking positions, get baited in, and then get squeezed. So that is exactly what happened. You can see over here, let's draw that, and then I'll explain to you in a second how you can actually take advantage of that. You can see as we're going down, we create all these lower highs, okay? And we're baiting everyone over here, thinking that we are going to break down and we're going to get a massive crash, right? We're thinking that, a lot of people are thinking that FTX is insolvent, potentially other exchanges are insolvent, everything is going to go a lot lower, we're going to go to 10K or 8K, which, you know, who knows if that's going to be possible in future still. But at this point, that's what a lot of people are thinking. So they're all betting on the downside, taking these leveraged short positions, 25x, 50x, 100x, and they're thinking they're going to ride that all the way down. Now, of course, as this sucks in more people, what they do is they take a bet to the downside and they place their stops at these previous highs, right? Thinking that it's going to be safe. I'm going to short, you know, if they're shorting here, they put a stop here or anything like that. And then exactly what did it do? That tweet with CZ and Elon, but that's this specific case. It happens a lot of the time, whatever the news ends up being, or sometimes it's not even based on any news. It's just a market maker or a big player putting in a massive market buy order. And then in one go, completely everyone who had stops, all these levels, you can see they got completely taken out. So we get a massive run up. All these people who were betting leverage short here with stops at these levels, they got completely taken out. And then you can see over here, what happens is that even up to this high, you can see. So anyone who was shorting at this level all the way down with their stops, say at this level, you can see how it wicked just above that level. All these levels got taken out, all the stops got hunted, and then it dropped all the way back down. So that's where it also catches other people off guard. So they see this. There's a lot of retail investors, again, who are thinking, oh, it's going to the moon right now. And they missed the initial move up. Maybe they even got liquidated while they were short. They see this move up. And then towards the very top over here, where it's starting to create FOMO again, they start leverage longing, right? Because they think, oh, we've got a breakout, we're reversing, and we're just going to continue going up. But no, they got liquidated here, and then the pullback over here, if they're longing up here with high leverage, they got liquidated again. And that's how these markets work, okay, over and over again. In the short term, especially when there's too much leverage betting in one direction, the market makers or whoever, big boys, whales, whatever you want to call it, they reverse the market and they take out those stops. And over and over, retail just gets rinsed, loses their money, gets stopped out because they don't understand how these markets work. And yeah, I mean, there's basically, of course, also a lot of people on social media who are apparently traders, and they're telling people how to trade, but all they're trying to do is get people to sign up through the referral link, and they give them complete wrong information. And of course, the people who are pushing the referral links are making money on their followers trading and getting liquidated. So that's obviously a very nasty practice, but there's nothing wrong with trading or sharing a referral link per se, if you actually help people understand how the markets work and teach them how to trade profitably, because these markets are predictable to a large degree, like I'm showing you over here. And then one really cool account to follow, it's completely free, it's on Twitter. You can go to the Kingfisher over here, just follow him on Twitter, and he shares these types of liquidation maps showing where it's likely that these high leverage bets get liquidated, where the liquidation levels are, where the stop levels are. And when there's these big clusters of liquidation levels, it is likely that the market tends to move towards those liquidation levels in the short term. So everything that I just showed you on the chart there, you can see while we were trading down here, you can see these big liquidation clusters right above here, about 17,000, right? So that is a big magnet showing that there's a lot of people here betting short. And if the price were to go back up to hit 17K or just above it, they would all get liquidated. And this is a very useful tool. Like I said, he shares it on Twitter for free. I think he also has a paid service, but just following him on Twitter, he shares these things from time to time, pretty regularly actually. And then you can see, in combination with your technical analysis and understanding how these markets work, even before CZ and Elon ended up tweeting at this point. Of course, we didn't know that was going to happen, but seeing this liquidation map and knowing how many people were betting short with the amount of stops up here, more often than not, the market is just going to reverse and run those stops. Whether CZ would have tweeted or not, this is what the data and the markets were sharing, and this is basically how the markets work. So, as you can see over there, where did we go? Like I showed you on that liquidation map, 17,000, and you can see we went just above 17,000 to liquidate all those shorts. And that was the liquidation map, but you can also see that's just logically what high leverage retail traders tend to do. They tend to bet in a direction and place stops over here. So the logical place to target would at least be these highs over here, but if there's enough power to squeeze it, you can see they run this stop, and even this stop. And now we'll obviously have to wait and see how this is going to play out, but keep in mind there's also still stops over here, there's liquidity here, and even over here. So I wouldn't be surprised to see us continue the move higher, maybe today and the next few days, and at least take out this level over here, so 17.5, and potentially even this $18,000 level. Because keep in mind, these are the complete what do you want to call them, apes or degenerates, who are betting with massive leverage, like 50x, 100x, and who are just basically gambling here because they have no proper strategy. So they get liquidated first. But there's also people who are a bit more cautious, who use lower leverage, or perhaps who got in earlier, who are perhaps trying to short from up in these levels, or even here, but putting their stop here to try and be a bit more careful. And then, you know, this was the low-hanging fruit over here, but this is, you know, the little bit higher up that the markets can still potentially push towards to liquidate those stops. And eventually, you know, as it goes higher, then we get the opposite, where everyone is jumping in with leverage longs again, and then we get a pullback, of course, to liquidate those leverage longs. So that was basically a bit of an insight into how this market works in the short term, and especially how it's geared around these liquidation levels, and how it simply just goes to hunt stops, because it's just a very profitable business to, you know, get these leverage stops liquidated, because they get there's a lot of people on the other end of that who end up making money as a result of that. So I just wanted to share that with you today. I hope that was useful and informative. If it was, please smash the like button. If you haven't subscribed yet, subscribe down below, click the notification bell, get on my email list, first link in the description down below. It is completely free. And if you want to continue learning from me, I've got a lot more courses, training. I've got a complete technical analysis course, teach you how to trade. You can join our Discord group where I'm in there 24/7. Second link in the description down below. It's my VIP membership, full 60-day money back guarantee if you want to join. So come and join, there's no risk. If you don't like it, you can get your money back in full. And it's really a good place that'll help you understand the markets and give you a much better edge and chance of success in these markets. Thanks for watching. I will see you in the next video.